Let's be honest. It feels like AI is absolutely everywhere right now. I mean, think about it. ChatGPT is writing our emails, and NVIDIA's stock price is just shot into the stratosphere. The hype is impossible to ignore, and you've got companies pouring billions and billions into this new frontier.
But all this frantic excitement, all this massive investment, doesn't it feel a little familiar? Are we just watching another giant tech bubble inflate, just waiting for it to pop? Well, in this explainer, we're going to dig into that exact question.
Okay, so before we can even start to diagnose an AI bubble, we got to get on the same page. What even is an economic bubble? The term gets thrown around a lot, but what does it actually mean?
You know, at its core, it's actually a pretty simple idea. It all starts when people begin buying something not for what it's worth right now, but for what they think it'll be worth later. Pretty soon, pure hype takes over. Prices skyrocket, becoming completely disconnected from any real value. Eventually, reality kicks in, the buying frenzy stops, and pop.
And trust me, this is not a new thing. History is just littered with these popped bubbles. You had Japan's bubble economy back in the 90s, the dot-com bust in 2000 that a lot of us remember, and of course, the 2008 housing crisis that sent shockwaves around the entire globe. When these things burst, the fallout can be devastating. All right, so with that little history lesson in mind, let's look at the case for an AI bubble today. Why are so many experts getting a serious sense of déjà vu?
So Exhibit A is just the insane speed of it all. I mean, look at this. It took ChatGPT just 2 months, to hit 100 million users. For comparison, TikTok needed 9 months for that. Instagram, 2.5 years. That kind of growth is, well, it's completely off the charts.
Now, you'd think with that kind of explosive growth, these AI companies would just be rolling in cash, right? I mean, more users should equal more money. That's how it's supposed to work, isn't it?
Well, here's where it gets really weird. Far from being profitable, some of these companies are losing just mind-blowing amounts of money. One estimate suggests OpenAI, the company behind ChatGPT, could lose a staggering $11.5 billion in a single quarter.
So why? What's going on? Well, it turns out AI is just incredibly, unbelievably expensive. It can cost over $100 million just to train a model like GPT-4. Then you have to buy all these super expensive specialized computer chips, you have to run massive power-hungry data centers, you have to pay for the best engineering talent, and on top of all that, you're fulfilling billions of free requests from users. Even if each one costs a tiny fraction of a cent, those cents add up to millions and millions of dollars, fast.
Okay, so this high-cost environment has created this fascinating and maybe a little concerning phenomenon that some people are calling the circular money glitch.
Let me walk you through a super simplified version of how this works. Step 1. A chip maker, let's just say NVIDIA, invests $10 billion into an AI company. Step 2. That AI company turns right around and spends a huge chunk of it, say $8 billion, on cloud services. And then, step 3, the cloud provider takes that money and uses it to buy more chips from, you guessed it, the original chip maker.
So you see the problem? On paper, everybody's revenue is going up and to the right. It looks incredible, but it really begs the question, how much of this growth is actually real and how much is just the same pile of cash moving around in a big circle, inflating everyone's numbers?
So, you've got this massive hype, you've got these questionable financial loops. It's no wonder everyone is asking the same exact question. Are we just living through the dot-com bubble all over again?
Let's actually compare them side by side. The hype? Totally identical. A world-changing technology with massive expectations? Check. But the key players are very, very different. The dot-com era was filled with unprofitable startups that frankly didn't have much of a business model. Today's AI boom, on the other hand, is dominated by these cash-rich giants like Microsoft and Google. And that is a huge distinction.
So let's play this out. What's the worst-case scenario? If the skeptics are right and this whole thing is a bubble and it bursts, does that mean AI just disappears?
No. And this is probably the most important takeaway from all of this. When a financial bubble bursts, it's the hype that breaks, not the technology itself. The speculative frenzy dies down, sure, but the real innovation, that keeps right on going.
And we've seen this play out perfectly before. After the dot-com bubble burst, the internet didn't vanish. Yeah, companies like Pets.com disappeared, but the ones with actual, sustainable business models, companies like Amazon, eBay, and Cisco, they survived. They weathered the storm, and now they're giants in the industry.
So, in a way, you can almost think of a bubble bursting as a natural filter. It clears away all the unsustainable hype and forces a return to reality. This process is what allows the truly valuable technology to mature and eventually thrive on its own merits.
So where does that leave us? It's entirely possible that two things are true at once. AI is a revolutionary technology, and it's in the middle of a massive financial bubble. The real challenge, then, isn't predicting the exact day the bubble will pop. It's figuring out how to tell the difference between the fleeting hype and the lasting transformation that will truly change our world.